how does a seller concession work to help both the buyer and the seller keep more money in their pocket at the end of the day? Well, let's check it out. I'll tell you all about it. All right, first of all, what is a seller concession? Well, negotiating on one of my listings and going back and forth, and the idea of the seller concession came up, and now we are adopting that into the contract. And so I want to take a moment to explain what a seller concession is. I know that a lot of people have been asking about this. This is nothing new to the real estate or the finance industry. It's been going on for years and years, but it is something that is back, and it's back strong after this whole seller's market has died down, and we're back to more of an equilibrium market, which is good for buyers and sellers. So, all right, first of all, seller concession is basically when the seller gives a concession or gives a credit on the closing statement to the buyer towards the buyer's closing costs and prepaid items. It's a typical thing that is done on an FHA, and the benefit to the buyer is that they are able to purchase a home with less money out of pocket at the closing table. So FHA loan requires that the buyer comes to the table with a 3.5% down payment, but the additional costs, the closing costs, and the prepaid items like the doc stamps on the mortgage, the year and 3 months worth of homeowner's insurance that needs to be paid up front, the year and 3 months of taxes that must be paid up front, any points that they buy down or pay down on the mortgage to get a lower interest rate, all of those things, they can really add up. And buying a $300,000 home, you not only have your 3.5% down payment, about 10 grand, but you also might have another $12,000 in closing costs and prepaid items. And so the seller is able to contribute to these items, which helps you to keep that money in your pocket instead of putting it towards those things. Now, what that means typically is that the seller is going to want more money for the house. So ultimately, let's say we've got a $300,000 condo and the buyer and seller agree to sell it for $290,000, and then the idea of seller concessions comes in, and the buyer would like a credit for $12,000. Well, the seller is going to say, okay, give me $302,000 for the home, and I will sell it to you with a $12,000 credit, which effectively at the end of the day is going to net them the same amount in theory as the $290,000 offer. The benefit to the seller for this is that it increases the marketability of the home, but the risk to the seller is that now the home must appraise for $302,000 and not $290,000. So in a market where the prices are going up quickly, this doesn't usually work because now we run into problems with the appraisal. We don't have comps. Homes that have sold in the last 120 days can support the sales price at that higher amount. And then if it doesn't appraise for that amount, now we're stuck right back where we were before, except now the buyer is out the money for the appraisal and the home inspection and whatever else. And the seller has lost out on potentially other buyers that passed up the property because it was under contract. So there is a risk to that. But when we're in a market like we are now, which is essentially flat or accelerating at a very slow pace, 2% year over year, we do have comps. We do have numbers that will support that value in an appraisal. And so if the neighbor sold, 2 months ago for $314,000, for example, then you really don't have a concern over the appraisal. And it's always a gamble because, it's up to the appraiser to come up with that valuation. But the appraiser is working for the bank to make sure that the bank is making a loan on a property that's worth the amount that the buyer wants to pay for it. But they're also wanting the buyer to get into the home. So as long as it's reasonable, it's going to appraise. The listing agent, myself, my job in that scenario is to make sure that when that appraiser shows up to appraise the property, that we make their job as easy as possible. And we guarantee this by putting together our marketing packets, which we present. There'll be a link in this video. And so we go that extra mile and we do that work up front every single deal. We don't cut corners. And that's what makes a great listing agent. But back to the deal. So if we have the buyer who is willing to pay the $302,000 for the property and get the $12,000 credit, they're essentially rolling that money into their mortgage payment because their mortgage is going to now be based on 96.5% of the $302,000 sales price rather than 96.5% of the $290,000 sales price. So essentially it can be a win-win for all parties, and that's how we work the seller concessions.